Hello and welcome to Switzer TV, and today I'm talking to Lauren Jackson from Fidelity, and we want to talk about an active ETF. Lauren, thanks for joining us.
Thanks for having me today, Peter.
Okay, so I'm surprised how a lot of people don't fully understand ETFs or exchange traded funds, and a lot of them wouldn't understand the difference between passive and active. So when we start there, what is an active exchange traded fund?
All right, so an active exchange traded fund or an active ETF is essentially a portfolio of companies that's actively managed that is now quoted on an exchange such as the ASX. So given it's actively managed, there is typically a portfolio manager behind the scenes constructing a hand-picked portfolio of assets that is designed to deliver a return to investors that's above benchmark after fees, and of course trying to mitigate some of those risks that might also be present in equity markets, particularly in volatile times like what we're seeing today.
Okay, so most exchange traded funds of people are passive, namely they track an index, but there are some kinds of investments, like you've got one with an emerging economies active ETF, where it's really hard to track a passive index. You really want someone cherry picking the best of companies, don't you?
Absolutely. So I guess in the passive ETF side of the equation, they're designed to replicate or track a specific index, such as the ASX 200 as an example. In niche markets, though, whether it's emerging markets or even in the global context, where you can't necessarily get access to those individual companies on the exchange here in Australia, you can find that active ETFs will help investors get diversification in one trade, but also get that hand-picked selection of quality businesses that are likely or hopefully going to grow in value over time, as opposed to maybe destroy some of that wealth or capital over time.
Okay, so if someone said to you, well, why should I be interested in an active ETF? What would be your strongest argument?
Yeah, I think one of the biggest benefits of active ETFs is just that access to instant diversification in one trade. So as I suggested, when an investor comes on market and is looking at some of these overseas markets or accessing some of those investment themes around the world that we might not necessarily be able to get access to here in Australia, in one trade they can get that instant diversification of that hand-picked portfolio that is actively managed and monitored on a daily basis. From that portfolio manager, you can really see that you can mitigate some of those downside risks for investors, but also generate those good returns over a period of time.
Yeah, and I know with the trade war and Donald Trump, the Chinese stock market has been really belted up.
Absolutely.
But some fantastic companies have been belted up as well. A portfolio manager looking at emerging economies could cherry pick those great Chinese companies and include them in the portfolio.
Yeah, that's
a lot of normal people couldn't do.
No, that's exactly right. And that, when you have a portfolio manager that is looking at, let's say, Chinese equities as an example, you can really distill those quality businesses that are less volatile to some of these market movements or the volatility that we're seeing in Chinese equities by finding companies that are still growing their earnings amidst what is a volatile environment over there.
So if we went through the benefits, we've already covered the fact that it gives you access to the sort of companies you couldn't pick yourself. Yeah. We've also said that it gives you diversification. Are there any other benefits that you'd underline from having an active ETF?
Yeah, it's a good question. And I guess there are a couple of other extra benefits there. So just that simple access point. So with an active ETF, given it is bought on market similar to the way that we as investors would buy or sell a traditional share, you can literally have your active ETF sitting alongside your holdings in your broker account. And that means that from a tax reporting perspective, end of year reporting, much more simple to obviously do your tax returns at the end of the year, because you can actually monitor your progress of your active ETF alongside any other investments that you're holding on market.
And also, what people have to remember is that an exchange traded fund is just like a managed fund. It's either passive or active. Now, with managed funds, it often can be harder to get your money out. It can take some time. With something like this, it's instantaneous, isn't it?
Absolutely, yeah. So again, similar to the way that you just buy or sell your bank share or your mining share, at the press of a button, you know exactly what price you'd buy your active ETF, which gives you the exposure to the underlying companies. And again, on the flip side, when you press the button to sell, you know exactly what price you're going to get. Okay. It is marked to market.
Now, we've referred to an active ETF that you guys have got for emerging economies. What's the name of that fund?
Okay, so it's the Fidelity Global Emerging Markets Fund.
Okay.
Its code is FEMX. So it's been on the quoted on the exchange since November last year.
Okay, right. So I guess the question is, well, why Fidelity?
That's a great question. So at the heart of Fidelity's DNA is active management. So investing is all we do here in Australia. Around the world, though, we have over 400 investment professionals that literally go out there and meet with company management all around the world on a daily basis. Over the course of a 12-month period, we attend more than 16,000 face-to-face company meetings. So you can imagine the sheer amount of data that we're uncovering as part of that
That's
research.
a lot of tyres to kick.
It sure is. But with that, we can really identify where the opportunities are for our clients all around the world. And we have been managing money in Fidelity since 1969. So a long-term time track record, and certainly something that we're very proud of to help our clients grow wealth over time.
A question my viewers might be thinking is, well, that's ETF you're talking about. Give us that name again.
FEMX.
Okay. What kind of fees involved? What kind of charge?
Yeah, so FEMX has a MER, so a management expense ratio of 99 basis points, so 0.99 of a percent, which is certainly something when you're getting a 35 stock portfolio, very hand-picked quality companies. And since quoted on the ASX last year, it's done very well for investors amidst that 6-month period.
Great stuff. Thanks for joining us.
Thanks for having me today.
That was Lauren Jackson from Fidelity. I'm Peter Switzer. Thanks for joining us.